Hello, this is Paul Mlajanovic, author of Precious Metals Investing for Dummies, and it's a pleasure for me to do this video here at preciousmetalsinvesting.com. And I think Ted Sudol does a great job at this site. And you see up on the board the #1 reason to own gold and silver today. And today is really August of 2014 as I'm creating this, but this will be just as good a month from now, 6 months from now, probably a year or 2 years from now, certainly. And the thing is this, look, between you and me, you're looking at the world at large. And you're seeing things such as Iraq and the Middle East are going nuts, as Hamas and Israel. Then you got the Russia-Ukraine conflict. Then there's the conflict percolating in Korea and Asia. Then we're talking about some new political and financial upheaval that might be going on in Europe. Then in America, you have to worry about the border crisis going crazy. You have to worry about the riots in Ferguson and Missouri and so many other places. And there's probably like 10 more or 50 more crises and black swans happening across the board. Meanwhile, what are we doing at the governmental level? I mean, we're printing up literally trillions of dollars, trillions of yen in Japan, trillions of euros. You have rubles going on, etc. So the point is, even though at the economic and social level, there seems to be things just unraveling, you're just tearing apart at the seams, and we're talking about bad economy, we end up finding out that a huge chunk of the quote-unquote jobs that were created very recently, according to Bureau of Labor Statistics, these were not even full-time jobs. They were predominantly part-time jobs. So it tells you that there's tremendous weakness across the economic landscape. And so now you have that. Then you have about the fact that so many things are being inflated with asset bubbles and etc. Across the board. And you come down to right now, before things get worse or fall apart, or a crisis in the Dow, or a problem with the NASDAQ, or bubbles that are popping in the real estate market or the bond market, or etc., or if currency crises occur, or inflation, or God knows what other things that are out there. Now it comes down to, what should you do on a personal level? If you see so many risks over here and so many unknowns over there, what should you do? Well, this is why in my seminars, when I talk to people, I tell people, look, the more self-sufficient you are, the better off you're going to be. I think people should be as self-sufficient financially as possible, as self-sufficient with their health, with overall well-being. And of course, I'm not a doctor or a survivalist. I believe in financial means, certainly, because that's my background, Precious Metals Investing for Dummies, Stock Investing for Dummies, among other books as well. And I think that the more financially independent people are, the better off they're going to be. Now, what does all this have to do with when I put up the point here about gold and silver here at preciousmetalsinvesting.com? Well, the thing is this. Probably one of the biggest reasons, maybe again, the biggest reason you should own gold and silver is that gold and silver as precious metals, and when we talk about owning them, I mean the actual physical gold and silver in your hand. Maybe gold eagles or silver eagles or other forms of actual coins, and a type of a medium, like for example, gold eagles and silver eagles, they make millions of those. They're bought and sold worldwide every week. So there's a fluid market. You can buy and sell them very easily. So they're very liquid, very marketable. It's easy to buy and sell them. And here's the reason why you should own gold and silver, especially given what I told you about the market going crazy and everything in the world seems to be falling apart at the seams, and about why this bears in relationship with you being as independent as possible. And that is the following point. When you compare gold and silver with all the other investments that on the conventional landscape that you and I have come to know, and let's face it, I mean, I love stocks, but stocks have their own particular unique risks. Bonds could be great, but they have their own unique risks. The point is this: whatever paper assets you own out there, there is a unique risk which is referred to as counterparty risk. And I've mentioned this in other videos, but it bears repeating here in this video, straight here for preciousmetalsinvesting.com. That is, gold and silver are among the very few investment assets out there that do not have counterparty risk. Now, what does that mean? Well, for example, see, when I own silver, it doesn't have a counterparty risk, or if I own gold, for that matter. So, well, what does counterparty risk mean to you and me in terms of the investment realm? Again, we're talking about physical metals. Don't confuse this with, precious metals mining stocks or ETFs or mutual funds or whatever else that's out there. I'm talking about the physical silver. And the reason why is because it's a great diversification away from paper assets. And paper assets, virtually all paper assets out there, have counterparty risk. Well, what does this mean? Well, for example, if you own, say, 100 shares of that company over there, now that stock will have value because it's tied to what? The underlying asset is a company, hopefully that has, profits and sales and all the other hallmarks of being a company. When you own stock, you're owning what? A partial and limited ownership in underlying entity, which is what? Which is an underlying company. So the point is this: what happens if that company goes bankrupt tomorrow? Well, what's going to happen to the value of your stock? Well, the stock will become worthless. And also, too, what if you own a bond, like a corporate bond or a government bond? Well, the point is this: those will have value, but only to the extent of what? That the counterparty, whoever the money's being loaned to, that corporation, that government agency, whatever, that they will be able to pay you back. You see? So in other words, counterparty risk means that when you own an asset, the value of that asset, in this case a paper asset, the value of it is tied directly to the promise or performance of a third party. Now you get to the point of what I'm talking about. Let's say in recent years you owned stock in, say, Enron or Bear Stearns or any one of hundreds of companies out there that were once, they seem like to be at the top of their game, but next thing you know, in some cases within a matter of days or weeks, they collapsed. Which means that you owned 100 shares or 1,000 shares or 1 share or 1,000,000 shares, it didn't matter. It became worthless. There was counterparty risk. So in the case of stocks, the value of your stock is directly tied to the performance of that company. Company's doing well, your stock will have value. The company ceases to do well, in the short term, it can go anywhere. But long term, the value of that company, will be tied directly to the value of that stock. So in due course, if the company is worthless, what will happen to your stock? It'll become worthless as well, okay? That's counterparty risk. Same thing with debt. So think about this. Paper assets that are owned across the landscape by millions of people, and there's billions of trillions of dollars owned in this, there's counterparty risk. Stocks have counterparty risks. Bonds, which means what? Things that are intermediaries, conduits of holding these, such as exchange-traded fund and mutual funds, guess what? In pensions, these have counterparty risk. Because a mutual fund or an ETF or some pension plan will only have value to the extent that the assets they hold, like stocks and bonds, for example, that these things have value as well. So again, entities could go bankrupt. We've seen governments go into chaos, government agencies go into crisis, state governments, across the board, ranging from Greece to many state governments, which are really shaky at this point. So the point is, you have to be diversified. You've always heard about it being diversified, but here's one that your financial advisor might not talk about, which is what? You should be diversified away from paper assets. Think about those things that have held on to their value. And in the case of gold and silver, physical gold and silver has held value for thousands of years. There's never been an instance where those things have become worthless. But currencies, have they become worthless? Well, across the landscape of history, thousands of currencies have become worthless. Thousands of stocks have become worthless. Many bonds and forms of debt have become worthless. So paper assets have the risk because if the underlying entity, whether it's a government agency or a company or whatever, if they're not performing or keeping their promise to pay back, then ultimately that's going to flow back to the value of that paper asset, which means it could become worthless. So how do you guard against it? You should hold assets that are free from counterparty risk as a form of diversification. And this is important now more than ever. Here in 2014, the risks across the world landscape are in some cases unique, but in some cases are what it's been for thousands of years. You have to worry about wars and currency crisis and organizations collapsing, and there's chaos and upheaval. So the more self-sufficient you are, the better off you're going to be. The more you're diversified across all investments, both paper and non-paper, such as gold and silver. And of course, I hate to put it this way, but what else can you have? If you own assets free and clear, such as your own home or other types of real estate property, this is a plus. If you own goods that have tangible value, like, believe it or not, a full pantry that'll give you some peace of mind as well. So how self-sufficient are you? How much have you made yourself immune to the potential for risks and crises that are there across the board and across the world and across the country? Let's hope it doesn't happen across your portfolio. But if it does, be diversified across the board. So remember, minimize your counterparty risk. And let's face it, gold and silver, you can't, with a few mouse clicks, instantly make a million ounces or 10 million ounces of gold or silver or whatever. These are very finite, and that's part of what makes it valuable. Whereas currencies, look, the Federal Reserve can print $1 trillion literally with a few mouse clicks and a keyboard. Same thing with the euro and the yen and so much more that it's out there. You can create debt, to extravagant levels. And now with the trillions that are out there, we're not going to be able to pay it all back. So there will be chaos and upheaval and financial collapse to some extent. We don't know how it's going to unfold, but it will definitely unfold. So the point is this: are you going to wait till a crisis shows up before you're prepared? No. It's better to be a year too early than a day too late. Alrighty. So again, I'm not selling you gold and silver. All I'm saying to you is what? Look, when you write a book like Precious Metals Investing for Dummies and other venues, I'm in the realm of education and knowledge. So the point I want to see you do is what? Make sure you're diversified. Have some of that gold and silver so that you're avoiding counterparty risk. You're properly diversified and you're as financially independent and as self-sufficient as possible. So thanks for viewing. I appreciate you visiting preciousmetalsinvesting.com. Keep on coming back. I'm looking forward to more contributions with this great venue, in due course. And I hope that you're as financially prosperous as possible. So I'm Paul Blagenovic. My own site is ravencapitalist.com. But again, thanks for viewing, and I'll see you next time. Thank you.